Okay, is everything working? I don't know, but we are going to have another backtesting session of my new swing strategy, and we're gonna backtest like daily, weekly, monthly bias with this strategy. Not on DXY though. We are going to go maybe New Zealand dollar, US dollar today, and let's see what we can kind of get during today's session. Excuse me. So let's go over this pair. Go back like I don't know, few years, and let's see if this daily chart kind of has given me has given us any good trading chances. So let's go over and start from the monthly. Start from the monthly time frame. Okay, how my analysis starts on monthly time frame. Let's take a look at that. So monthly time frame has broken out from this previous range and broken structure to the downside. We need to understand how the market structure works. So understanding that we are now respecting a little bit more these bearish PD arrays right now. So we should be looking more towards sells in monthly, but monthly. So like monthly is the greatest time frame. So like it doesn't really matter, you know what I'm saying? So here we respect the fair value gap. Now here we close a little bit over, so that is a little bit of bullishness there. There's this order block, and we basically cannot break through that. Sorry, here. Perfect respectance of that, so we are then smashing lower, flip all the bullish fair value gaps into the IFVGs, and we are trading lower. Asking a question now, even if we were to go higher from here, because that is a possible, because or even if we were to go lower from here, I think some type of retracement should happen here. If you look at here closely, this candle high trades a little bit past this and mitigates this fair value gap, but that's effectively still majorly, like mainly open, this fair value gap, and there's liquidity up here. This is your monthly BPR. So we could expect that if price trades back up in here, we should see major resistance in inside of a monthly BPR. These are strong levels, and there's even like X3 BPR. There's like not only two fair value gaps, but the third is here as well. So this is like even stronger BPR, I would say so. Okay, but let's look at the. So if you're thinking this as a bullish price leg, which it kind of is. Obviously, it's very wiki, so this is not really giving you an idea of strong bullish momentum. But looking at this as your dealing range, equilibrium has been rebalanced multiple times. Then you take out a big amount of liquidity in these monthly lows. The most latest is this one. Okay, liquidity being taken. What should you be looking at next? Maybe some type of rejection from this monthly order block to see price trade up, and like whether price wants to then have a pullback and trade back up, or have a pullback another pullback like this and then smash lower. I don't know what should happen. Now that I'm looking at this monthly time frame, and here you can see fair value gap relative equal. Also, my idea of sales would be more like more justifiable, if you know what I'm saying. So let's go to the weekly time frame and let's see what we've got here. So we've got break of structure to the downside, but we've also swept quite a amount of liquidity, and I would like to mark out this order block here. We've mitigated that one. Nothing much more to say. Weekly time frame doesn't really give much more to this. So let's just go to the daily. Okay, how is this momentum looking like? Well, I love trading momentum, first of all. Looking at the market structure and how the momentum is unfolding in the markets, you can very well identify your opportunities. So strong push down, choppy move up. Usually after these kind of things, market has another strong push down. So from this area, we could trade up like this, but I'm not necessarily expecting that. I'm not going to take sells either, because maybe if I was trading 4 hour time frame, but we are backtesting the daily time frame now, so I'm just letting it go. We break structure to the downside like this, create an order block, create in this daily range. So you could have a sell limit on daily like this and expect a deeper mitigation into this order block. Now, this would be purely like a momentum play. We haven't really swept that much liquidity. Yeah, we've got this previous day high here. And yeah, this is definitely a setup that you could take. I would be a little bit hesitant with this because we are far in the discounted zone in monthly and weekly. Looking at those, yeah, I would say if I entered into this, it would be very light risk. I would be more keen on waiting market to retrace lower and then give you break of structure to the upside, from which you could take buys to the premium zone of this monthly price, like to the downside. So yeah, you could make some money with sells, and I'm just for the sake of it going to taper it this, but I wouldn't have taken this at least with the full risk. So let's see what market gives you. From the 0.618 level there, we are always entering from the 0.618 because I figured out that from the 0.705 level doesn't get hit nearly as often, and I love my 2 to 1 risk to reward, so I'm able to get that every time with that 0.618 level, so everything is cool. Okay, now we've smashed lower. We haven't really mitigated this, and at this point I wouldn't take this anymore because we have taken once more this liquidity. We mitigated deeper into this order block, so this is not anymore a setup that I would want to indulge in. Yeah, nothing more to say really. Let's just taper it this, but I wouldn't have taken this. And if this ends up trading lower, that is 100% possible. But I just like, even if we are following the trend, selling when we are trending, I just don't like it how we are in the higher time frame PDRA, from where we could possibly see a deeper pullback into this range up here. So I just wouldn't like the odds of me being a part of this, and you understand that, okay, we won here. If I didn't look into high time frames from daily, this could have been just a good trend following play, but I didn't want to take this, and I just keep it 1,000. Now we see very strong push down. Looking at the weekly, let's see if we have taken any important lows here, because inside of this order block we've got weekly lows such as this one and this one. Let's see if we have taken any of those. So yeah, so now this Monday we are not really breaking structure in the daily as of now, but in weekly, actually no, there's nothing in weekly either, because we didn't even flip or inverse this bearish gap, and now we're reacting to the downside. So okay, what does this tell you then? Well, is this like a good break structure? I would say, yeah, it's fine. We haven't even swept these highs yet, so if we could get a retracement without sweeping these highs, I would be like happy about that, and I would probably indulge in this trade. So, looking at this range, 0.618 level, lining up with that order block here. Now the question is, do you want to draw this fib one from this huge wick, or do you want to go from like here? I don't know, man. I would just say that the entry is good from this order block body from here. This is decent stop. Having your initial target just at 2R, I would be content with that. I think it's looking like we are sweeping these levels before I'm able to get in, and that's exactly what happened. And maybe 4-hour chart could have given you a more clear break of structure in this area or somewhere in here and given you a nice entry, and that's why I love trading 4-hour, but we're not backtesting that as of now, so I'm just staying out from that. Another question is, do I still want to get in, because we haven't really, we have swept a lot of sell side, now we have swept a little bit of the buy side, so do I still want to be a part even though we have swept the buy side? We haven't swept all of it. We have here relative equal highs. I'm kind of afraid that we are now shooting without retracing at all. But for me, it's more important to be right in terms of the overall bias than get these entries in back testings and tape readings. So my drawn liquidity is now up here. The final target is up here. Entry from this level. I would now draw it from the body because the wick is kind of an anomaly, I would say so. Because there's 2 order blocks above that wick, so that those order blocks are probably protecting our stop anyways. This would be the overall trade. Would I want to enter? Okay, I don't like this because now we swept this as well. I would still enter if we now fall, and now we've swept enough liquidity for us to maybe give a retracement, but this is not that great as of now. This is the last price point for where I could enter to get the nice 2R trade. So okay, mitigation would have happened there. The reaction is kind of choppy, you understand that, so I don't know if we start to see strong bearish candles to the downside now, I would respectively stay out, and maybe I would have my stop actually here. Um, that would, although that would require like a entry at, sorry, that here is good one still. So yeah, okay, we don't see that much of a bearish momentum to the downside, so that's a good sign. We have a little bit of choppiness. I would love to see like these kind of similar candles to these, like very strong bullish candles, because if you look at the weekly range, as we measured this data range, okay, we have now mitigated the equilibrium, but we've left some liquidity here monthly. As we identified, there is a large imbalance here. If you want to draw your data range from here, we actually haven't quite got the equilibrium price, and we're rejecting from the order block that I identified here. So I would say this buy is a valid one. Um, depending on your risk management protocol, you could have your trailing stop loss in the break even. I would say that would be a viable one, because looking at this price structure, we created new higher low here, which means that that higher low should be in a bullish scenario, that should be respecting that trailing stop loss. We should be fine in break even. Now we're starting to see much more bullishness here. We love that, but now we see strong bearish candles. Now let's see if this is being respected. Okay, it is being respected, but we need to be careful because this is now relatively equal lows, and even if this wanted to drive up, that could like take inducing these lows and then shooting. So we need to keep things in mind and remember that this is just a tape reading session. But we are still having a little bit more bullishness, but this is kind of starting to consolidate. Now the question really is, okay, first of all, we leave these equal highs. Market is engineering buy side. As this was our trailing stop, it hasn't mitigated or done anything to our stop as of now. I'm more interested in, are we able to sweep this liquidity? Okay, we start basically trending down. We also want to induce this low, and we are having bearish momentum, but that doesn't necessarily mean that you're gonna lose in this kind of buy scenario. We are far in drawdown. We wouldn't have lost that, but like, I'm not gonna lie, in this kind of scenario where you leave, okay, this good scenario here, but then you come back down, then you fail to break this low. At this point, I'm like, we are either entering into a consolidation and after that smashing to the downside or smashing to the upside, and I don't want to be wrecked here, so I would have had my trailing stop respectively somewhere here in break even, and this would have been a break even trade. I'm not going to lie, I'm not willing to let price trade down like this. So I could be a part of another buy if we now break structure to the upside like strongly. Purely based on the fact that we left these equal highs here. This could be your like a accumulation, manipulation, distribution pattern where you kind of, this area is the accumulation phase, this is your manipulation, and this is your distribution. Also, we got the break of structure to the upside in weekly here, and we are still trading inside of a bullish range, so things are kind of lining up for the buys, I'm not going to lie. So I would measure this price like again, here the entry from the 0.618 level. Overall target here. I would be a little bit hesitant because there is a relatively equal lows here. So maybe I would give a little bit room for price to breathe. This is exactly the reaction that you want to see. And this is a good example of why I don't put my limit entries in the 0.705 level. Look at this 0.618 level gets hit and price is like 8 pips away from this 0.705 level, so it's kind of very frustrating if you miss a trade like that. So I like that level that I'm using. This is exactly the reaction that you want to see. This is giving you much bullishness. In these kind of scenarios, I tend to, well, now that I look at this, this is not that bad, but stop as of there. 2R is here, so I like to mark that one out like that, and I would be like 50% of the trade off there, so that would be 1% gain. And that would be break even with the rest of the setup, because we need to also understand that even though the kind of bias for me was to the upside, we need to understand that the latest price leg that I deemed as a manipulation price leg is still bearish. So if price is bearish, where is it going to reject from? It's going to reject from around from this 0.618 level in the premium, and that's exactly where my target was with the 2R, and that was actually, looking at this now, was very good target and very good partial point, because you need to understand that if your bias is wrong, you can still make money with these moves just taking the partials out. Price does not have to move all the way to your full TP for you to take profits or make money. So basically we were wrong with the overall bias. Market wanted to take a little bit more sell side, and I don't know where it's going to head after this. But even though we were wrong with our initial bias, we still made profits, and that's extremely important to know how to use these kind of things. So then we smashed lower, and you know what, let's just leave it there. Have a good day.